Hi guys, and welcome to Pathways Markets. Talking here is the senior market analyst. Guys, please do not skip this video. This is going to be one of the best trading firms you've seen in history. We are very confident of that. Please note that this video is not financial advice and is actually for our traders in our trading firm, but we are uploading it as we believe that it is very educational and very informative. Please note that we do not provide any services such as signals, financial advice, or account management, as we do not have an FSP license. Please guys also follow our Instagram page. And as for this video, please do not forget to like, share, and subscribe. Without wasting time, I want us to talk about the monetary policies today. Why are we going to be talking about that? Because that moves the dollar. And if the dollar moves, the Nasdaq 100 also moves. What is the relationship between the Nasdaq 100 and the dollar? The relationship is inversely proportional. So when the dollar is strong, Nasdaq will sell, and when the dollar is very weak, the Nasdaq will buy. So what really moves the dollar? What is the dollar driven by? The dollar, guys, is driven by the FED. So this FED, guys, has two important roles. One is keeping inflation at acceptable levels. Yes, bread can go under inflation, but bread shouldn't be too expensive. So here we look at CPI, PCE, and the PPI. Two, second important role is they need to create an economic environment that can create maximum employment. This is where we look at NFP and initial jobless claims. So guys, the economy is always fluctuating between a recession and a growth period. To make this easier for people that did life sciences, when we did evolution, we learned about punctuated equilibrium. Punctuated is a rapid growth and equilibrium is a slow growth or no growth at all. The similar thing happens in the market. We have a recession. A recession is a slow growth. So there is no growth or the growth is very slow. And we've got the growth period, which is high growth. So when an economy is in a recession, guys, they need to stimulate it using lower interest rates. And when the economy is in a high growth period with an excessive consumer demand can lead to inflation. That means the price of things are getting more expensive because everyone wants that stuff. This can be fixed by taking interest rates up, which will raise the cost of loans and reduce the demand from consumers for goods and services. And this leg of demand will then bring down the price of those things. So guys, I know this is too much English. That is why this trading firm exists, because we make things practical. So without wasting time, let's jump to the charts. So we're actually going to start with the USD ZAR, guys. I want us to go to the 18th of December. On the 18th of December, guys, the FOMC, the FED released very important data. They cut interest rates. This happened here. I've marked it for you guys. FOM release, rates were cut from 4.75 to 4.50. I want you guys to see how this really affects the Nasdaq and how this actually affects the USD in general. We can see that the dollar actually started gaining strength. The dollar, guys, moved from 18 rand 07 or 08 to almost 18 rand 32 there in like an hour. That, guys, was so tremendous. That was a big deal. And the dollar didn't stop there. It actually gained strength up to 18 rand 50. The dollar even reached a high of 19 rand, which was here. Where is the 19 rand peak? Yes, it's here. It reached 19 rand 20 cent, showing guys that the dollar really gained strength. So as I said, the relationship between the dollar and Nasdaq is inversely proportional. When the dollar gains strength, when the dollar becomes too strong, Nasdaq will sell, which is exactly what happened in December because the dollar gained strength. Now, let's see it practically, because there is no point in us talking about this while we are not seeing it. It happened. Look at this. Here at the Fomc release, we see that Nasdaq, it introduced itself. It was like, hi, I'm Nasdaq, and because the dollar has gained strength, or it's gaining strength, I'm selling. That's why it moved aggressively to the downside. So the question is, how do you catch these entries, or how do you trade it? What do you do? Guys, we use the 200 exponential moving average and the 50 exponential moving averages. When these things cross, that's when we start looking for selling or buying opportunities. So on this day at the FOMC release, this cross did not happen in time, and the market actually left us. But do not panic. The crossover did not happen in time because the fundamentals were fully in control, and it took time for technicals to kick in. So here I was now, we're looking for sales. The Nasdaq decided to trick people. It crossed over to the upper side. Now, because I have experience, I knew that, okay, this crossover means we are looking for buys, but the dollar is still too strong. So if the dollar is too strong, it doesn't make sense for us to be buying. I relaxed, and look what happened. We got a crossover to the downside, plus the dollar was very strong. So this sell was guaranteed. I knew that the sell was coming. We waited in the AMs till we got the sell at 11 in the morning. We waited for our first candlestick and our second candlestick. We entered here. This went to a drawdown of minus 37 Rand on Vault Markets. Then the profits from 400 here were going to make 7,000, and with the 50 Rand that went to minus 37, this move made a whole whooping 800. As you can see, the market then collapsed. So this is what I mean when we say that we only take long trades, guys. We do not take short trades. We want to focus on trades that have serious pips. Same thing happened. So, okay, how did I take the sell? So you wait for 2 candlesticks, then you also check the top 20 Nasdaq companies. They have to be negative. Over 80% of those companies must be negative. So I'm talking about 16 out of 20 companies here were supposed to be negative. Here we used extended hours because the market hours are for the New York session. So the New York session was not open, that's why we used extended hours. Then we used that, then that's how we got the sell. And then Nasdaq came and tricked us again. How did it trick us? It gave us a crossover. This was a trap because the dollar was still very strong and we were looking for sales. This is where your mentor started drawing trend line breakout. Then look what happened. Crossed over again to the downside. Then it started consolidating because this was NFP week. Then I remember we got the entry right before NFP. So the entry was 1, 2 on the third candlestick. You enter. You also check the companies, and the companies here were corresponding. I'm gonna say sell over 80% of top 20 companies negative. And I'm gonna say guaranteed. See guys, that's why we use the moving average cross, because it tells us if movement is coming. Now look what happened. Sold. Another 50 Rand to 800 with this move right here. Now look what it did again. It has come now to the current price. It has crossed over to the upper side. It has crossed over to what? To the upper side. This is the crossover. Crossover trap because dollar too strong. because dollar too strong. So we are still looking for sales, guys. But if you check today, after Trump was officially put into the office as president, the dollar actually, guys, is becoming weak. But we are not yet sure because we are still awaiting jobless claims that are going to be released on Thursdays. We are still awaiting the next FOMC meeting on the 29th of January, which has the power to make the dollar very weak so we can start looking for long-term buys. But till then, we are going to focus on the sales because currently the dollar is still strong. In our next video, I'm going to show you how, because these trades only come twice a month or 3 times a month, I'm going to show you how you can scalp Nasdaq only with the companies and how to be scalping in the right direction. But for today, we are going to end this video here. So what is the summary? The summary is FOMC has the power to set the price of the dollar once. What do I mean by that? If you look at it in general, for the whole month, Nasdaq has been mainly focusing on sales because the FOMC made the dollar strong. So the next of FOMC has the power to change the dollar for it to become weaker or for it to become stronger, and that will determine the main direction we should be trading on Nasdaq. Please guys, do not forget to like, share and subscribe. And thank you so much for making it far to this point. Lots of love guys, and good night.